Welcome to FX Street. Thank you for coming. Before we get into talking about crypto.com and the threats that it's facing from a price action and technical perspective, we really encourage you to head on over to YouTube, join our channel, hit that subscribe button, follow us on Twitter at FXSCrypto, and you can follow me on Twitter also at JustAnalysis1. Taking a look here at crypto.com. I did an article last evening on crypto.com talking about it was really kind of sitting here at this make or break point. There was some signs yesterday during the intraday session that it could break back into this bull flag. But ultimately, really as it got close to that 41.5 to 42 cent range, sellers really kept putting pressure on it, pushing it south. So, it has confirmed an ideal bearish Ichimoku breakout within the Ichimoku system. That was last Friday on the 4th of March. Didn't see a lot of follow through on Saturday. Even on Sunday, it dipped a little bit lower. But then you had a nice little bounce around that 618 Fib retracement at 37 cents. And it bumped up on Tuesday. Wednesday, it went as much high as, let's see here, 6.5%. But ultimately, it closed below the bear flag and the Tenkan Sen. And this is an important zone to pay attention to, because what you're seeing is really a retest of the breakout from the bear flag and a retest of the ideal bearish Ichimoku breakout. And so people who are sellers, whether they're just looking for signs to get out of their positions or to not add, or people who are looking for short opportunities, the close yesterday was really the signal that a lot of those participants were looking for, because when in technical analysis 101, when price breaks support structure or resistance structure and it retests and then it continues in the direction of the break, that retest is the thing that a lot of conservative traders and investors look for. And so this is telling us that a continuation move south is very likely. It is very bearish on the daily chart. And as far as how low it could go, it has already tested the 618 extension at 30, 35, 32. It might be hard to see that there. I'll make the font a little bit bigger there. But it could go even lower to test 30 cents even. And then when you look at the volume profile from 2021, we scroll out, it's looking at the volume profile. This is the extended volume 2021 volume profile. The volume profile gets a lot thinner. Okay. It starts, out here and then it gradually goes down. That means that it's easier for CRO to move down than it is to move up. And the more it moves down, the faster that move should be. And especially when you look at the price level here at 33 cents down to 27 cents, the volume profile is non-existent. And so it's likely, how we trade volume profile is that the theory is that price likes to move from one high volume node to the next. And so especially when it gets into areas where there's a very thin profile, it gets sucked through it like a vacuum. And so really anywhere probably between 35 cents and 33 cents, any daily close around there is likely to generate a very, very fast, really a flash crash down into an area between 27 and 25 cents. The 1618 Fib expansion from this current swing is kind of near that 25 cent range. It's at 23.72. So that would be the next expansive low. But 30 cents is a good psychological number. May find some support there. We'll have to see. But yeah, from a bearish perspective, it looks, if I was somebody who was could short or looking to short this, it looks primed for that kind of setup. If bulls really want to invalidate any near-term bearish price action, it's kind of a bit of a long road. Ultimately, they'll need to, close CRO above the Ichimoku cloud. And today that would mean a move up to 51 cents. That would need to be from the open. that would mean it would need a 27% spike today. But thankfully, if there's some positive signs in the future, after let's see, it's after Saturday, Sunday. So sorry, this is Friday, Saturday, Sunday. By Sunday, the threshold to close above the Ichimoku cloud starts to drop. And it becomes a little bit easier for CRO to move higher. So for right now, looks very much like there's bearish continuation. When I revisit this next week, probably the downside risks are likely down in that 30-cent range, and the upside potential is likely limited to 45 cents or so. So that does it for me. Again, from all of us here at FX Street, thank you for watching. Please remember to go over to YouTube, hit that subscribe button, follow us on Twitter, and please don't forget to like, comment, and subscribe.